Thanks so much, Sherry. And again, as you mentioned, we are here in Kuala Lumpur on the sidelines of the ASEAN Summit. And also seen as a bit of a prelude also to an even bigger summit tomorrow where the ASEAN GCC China Summit happens. And this is bringing together some of the biggest economic blocs in the region, actually, some of the biggest growing economic blocs, as we see more of a need and interest actually growing in terms of fostering economic ties, especially against the backdrop of a decoupling of the global economic order and perhaps the rise of protectionism and fragmentation of global free trade. It becomes more important now more than ever for not just ASEAN, but also countries like China and the Gulf region actually to build stronger economic ties, perhaps offset some of this global economic slowdown. Of course, there's been a lot that's happened since Liberation Day was actually announced at the start of April, and a lot more consensus perhaps getting built by countries that want to uphold this, the concept of multilateralism, especially in the realm of free trade. We do have a special guest, as you mentioned, Sherry, in the form of Jin Liqun, who's actually the president of the Asia Infrastructure and Investment Bank, to talk to us about the bank's outlook actually against this ever-changing economic backdrop that seems to worry people, but also creating a lot more of a reason actually to speak and to build consensus. Mr. Jin, thank you so much for joining us today on the sidelines of the ASEAN Summit and ahead of the ASEAN GCC China Summit, actually. What do you think are some of the big goals and some of the big things that need to be achieved at some of these summits right now, where you're trying to build what's being called multilateral reciprocal platforms in an economic sense, sir?
I think the most important goal of these events is, in my view, strengthening of the intra-ASEAN countries' solidarity, cohesion, and cooperation, and also enhance ASEAN countries' economic cooperation and a bond or ties with other countries, in particular China.
Right. When you talk about what's happened over the last couple of months, and again, this also happens against the backdrop of this rising protectionism, a lot of the strong rhetoric coming out of Washington, D.C. with regards to tariffs. It seems to have calmed down a little bit over the last couple of weeks, but I think people are worried that perhaps the damage has already been done. Are we still in for a global economic slowdown from the viewpoint, at least, of the AIIB?
I think probably somewhat the economies or global economy will slow down a little bit. But this is sufficiently a warning to all of these countries involved that nobody would emerge successful from the war of tariffs. And I think more and more people came to understand this. And that is why you see in the US-China recently had an agreement. And the 90-day is certainly very much valuable time, but 90-day is not long enough. So they should try their very best to seek a permanent solution. And I think the US-China negotiation and the outcome also indicates that when people sit down and discuss the issues in a serene and calm manner, problems could be hopefully solved. So ASEAN countries facing the external shock certainly understand how important it is for ASEAN countries to work together among themselves and with the rest of the world.
Now, over the last couple of weeks, a lot of discussion has been around a possible U.S. economic slowdown because this tariff war is said to possibly be damaging, at least, to the U.S. economy. But perhaps not a lot has been talked about with regards to the impact on the Chinese economy. As we mentioned, a trade war will hurt both sides regardless of what happens at the moment. Is there a concern now of possible second-order effects impacting the Asian region from a Chinese economic slowdown? And is that something that perhaps needs to be also discussed at these particular talks?
I think in the run-up to the ASEAN summit, and over the last couple of months, ASEAN countries, China and others are already braced for a very tough time. The geopolitical wind has been shifting, and for the last couple of months already, the countries are preparing for Plan B, and they cannot just follow the traditional pattern of trade relations and investment. So they have to reconsider the approach. With regard to slowing down of the U.S. economy, there are obvious signs. And if the policies adjusted somewhat, probably they can reverse the trend. If not, and if the war of tariff continues, it will be very much damaging for the U.S. economy. Certainly, it will be having impact on the Chinese economy or the ASEAN countries. But you see, China has already been doing a lot of things to stimulate domestic economy, stimulate consumption, and also encourage the private sector to invest more and to be more innovative. So countries are prepared.
Now, as these countries start to talk, I've also noticed, Mr. Jin, that there's also been a growing importance or perhaps interest now in perhaps weaning off trading systems from the U.S. dollar and perhaps using other currencies like the yuan and others. And this has been perhaps gaining steam among many countries in ASEAN, China, and other parts. From the AIIB's point of view, is this actually going to be a good thing for economies perhaps to be less dependent or less connected to the concentration risk of being so dependent on the U.S. dollar, especially in this backdrop now?
You see, if we look at the history over the last 7 decades, ever since the end of the Second World War, you see the economic situation certainly has always been changing, and the relative economic strength of different countries will also change. That is why, for instance, after the Second World War, the US dollar became the main dominant international reserve currency. But regardless of what's happening, I think the developing countries' relative strength is also increasing. Okay, and so it's quite natural for some other emerging market economies, currencies would play a more important role relative to their trade volumes increase. So it's quite a natural, I would say, economic course of development.
Now, in terms of weaning themselves off of the possible risks of that volatile dollar, is this going to be helpful as well?
Certainly, people try to avoid risks, and they try to find what is the best way in their economic dealings with the rest of the world. For instance, what kind of currency would be safe, and would it be most, I think, helpful. So you see, recently RMB has been playing a greater role along with the Chinese economics growth. So I would think it's quite natural, and it depends on each and every country's domestic strategy to deal with the shifting situation.
Right.
Yeah.
Speaking of shifting situations, over the last couple of days, everyone in the financial markets have been a bit concerned or perhaps interested actually in the recent downgrading, at least, of the U.S. sovereign credit rating to double. They're still in sovereign investment grade, but still down from the AAA club at the moment. It's always interesting and always curious to see how groups like the AIIB actually react to this, because it does create perhaps unwanted volatility in terms of financing activities and interest rate volatility. What are your thoughts on what's happened and whether or not it's going to make your job a bit more challenging, actually, at the AIIB?
I think the downgrade of U.S. sovereign rating would definitely increase the cost of U.S. borrowings. U.S. borrowings is very much important because of the high level debt. So direct impact is on the U.S. certainly. And with regard to the impact on the rest of the world, I think probably it's minimal. And as you know, the Asian Infrastructure Investment Bank has the dollar as the main currency. Okay. On the other hand, because of the demand of our borrowing countries, we also issue bonds in local currency. We provide local currency financing for our members. And also, we need to set up our benchmark in the global dollar market, in China panda bond market, in euro market. So our actual management of the currency is pretty diversified. But what is most important is for us to respond to the needs of our members. If they need local currency, we give this to them.
Right. And speaking of responding, I know that the AIIB is also gearing up for a huge annual meeting, the 10th one, I believe, in Beijing next month. Can you give us an idea of what is on the agenda and what might be at top of the agenda as the AIIB prepares to host this out in the Chinese capital?
10 years into operation, AIIB has already developed into multilateral development bank, broadly recognized as the top-tier development bank. And we're very proud of the achievements made under the guidance of the board of directors, with the collective efforts of management and the staff. And certainly, the credit goes to all of our members, because without their strong support, it's not possible. We now have 750 staff from 70 countries. It's very much diversified, and also we have provided a lending over $60 billion, over 300 projects, covering Asian countries and Latin America, Sub-Saharan Africa, Eastern Central European countries, and Gulf countries, Central Asia. So our coverage is pretty broad.
Global.
Now we have achieved this because we adhere to the high level of governance and international best practice. So moving forward, as you know, under the leadership of the new president will be elected before the annual meeting is held, and I will step down on the 15th of January next year. But I believe that the bank will go on the track of its established principles, rules, and procedures. At the same time, I certainly hope under the leadership of the new president, there will be no innovations, creativeness. The bank should stay young and energized all of the times.
Yeah.
So we are very much confident.
This bank is very interesting also because some say that it is actually a bank that's very much led by China at the moment. Do you see that other members, like say India perhaps, taking a more active role in shaping the direction for AIIB in the next decade to come?
But all of these times, China, India, and all the other shareholders have been playing a very important role. This is the bank in which the majority shareholders are the developing countries. European countries plus Canada also account for more than 25% of the voting power. So there's a pretty good check and balance. And each and every member, regardless of the size and the economic might, are playing a very important role.
Yeah.
So ours is based on collective wisdom and collective decision making.
All right, Jin Liqun, outgoing president for the Asia Infrastructure Investment Bank. Thank you for joining us today at CNBC on the sidelines of the ASEAN Summit, and congratulations, and we look forward to the next 10 years at least and beyond for the AIIB as it grows to a more prominent financing arm for infrastructure development in the region. That's it for now, but we'll have more conversation on the sidelines of the ASEAN Summit. For now, it's back to you, Mandy. And the concern of Chinese goods coming into ASEAN has been something that's been raised by a number of business leaders we've spoken to over the course of the last few weeks, actually. And also it makes things a little bit trickier for ASEAN, actually, because on one hand, they do want to widen and expand trade relations with China, but at the same time, they also want to make sure that they can address some of these concerns. Now, we have to also point out, in fairness, that this is not a viewpoint that's shared by everybody. In fact, there are some voices that think that perhaps the oversupply concern from China might be a little bit overblown, and that there are more other ways to navigate this tricky path, actually, or this little potential wrinkle in trade relations between China and other parts of the Asian continent. And that's something we want to talk to with our next guest, actually. Keyu Jin, who is a professor at the London School of Economics, joins us today on the sidelines of the ASEAN Summit to talk about the implications and the importance of these discussions on the Chinese economy and also the broader Asian region, because we know the economy of Asia itself has gotten a lot more integrated over the last 10 years. Professor Jin, thank you so much for joining us today. I do want to start off actually by some of those comments from ASEAN business leaders we've talked to over the last couple of weeks with regards to concerns that, yes, it will benefit ASEAN economies to expand their ties with China, especially against the backdrop of what's happened now, but there is a concern of oversupply. Now, you've said that before, that we shouldn't overblow, perhaps, the concerns about Chinese goods flooding certain markets in Asia. Can you talk to us about why you think that maybe we need to at least pump the brakes or cool our jets a little bit about concerns about this oversupply issue?
Great, good to be with you. I think that we first have to separate the opportunity from the risk. As we have learned from the first U.S.-China spat, there are a lot of third countries that have benefited, in particular ASEAN countries, including Vietnam and the broader region. Not only have they been able to take up a lot of manufacturing, a lot of FDI came in, Chinese FDI, other countries' FDI, and we also found out that these countries were able to export more to the world, not just a rerouting of China. So I think the benefit here is really to jumpstart this manufacturing export process in the region, pull up the macroeconomy, and then make it really a very vibrant export base. And I'd argue that a lot of the competition between China and this region in terms of these goods are no longer the same. China is trying desperately to move up the value chain, and they're really competing with the likes of Germany, Taiwan, South Korea eventually as they go up the value chain. So it's not really head-on-head. And then when we talk about the oversupply issue, well, yes, of course, if Chinese domestic demand can be boosted, and that is the real focus of the Chinese government currently, some of the production capacity can be absorbed domestically, but we have to ask the question, the green technologies, the highly competitive, productive, lower cost, high quality goods, what are you going to substitute that with? Now, that said, I do believe that in keeping with the harmony of the world trade balance, China has to think about ways, either maybe appreciation of the exchange rate, maybe some kind of voluntary export controls. But I think questioning that is really questioning the overall benefit of free trade.
I want to pick up on something you mentioned out there, and this might be the key not just for solving this oversupply concern that people have, but also perhaps the Chinese economy. The key is the domestic consumer in China. Now, shifting towards a domestic-driven economy has been one of the trickiest economic problems, I think, for the last 100 years, especially in the Chinese context. How successful do you think are these efforts going to be? Because the Chinese government has tried many times in the past to try and at least stimulate the Chinese consumer. Why is it so tricky, and why do you think it might succeed this time around, if it will?
Well, the demand-focused policies are really just recent. If you think about the last 10 years, it's always about supply, subsidizing supply and production. And we've seen a modicum of modest results from the last year's September's stimulus policies, which we have seen consumption pick up a little bit. But I think this is really a longer-term structural issues. If you think about the hundreds of millions of people in the countryside without proper social infrastructure and protection, those are the ones that have the biggest marginal propensity to consume. And I'm also very positive about the young generation because, as we know about the Chinese youth, they like to have a good time, they spend and they borrow, so there's a transitional issue as well. But I think really from the last question, it's really about moving away from manufacturing to services, right, or transitioning to services. Services only account for 50% of GDP in China. It really should be at 80%, including employment. And this young generation, they're all about the coffee, the retail, the traveling, the entertainment, education, finance. That should be opened up. That would ease the pressure on everyone
Could you help us clarify something? Because on one hand, that picture is correct about the Chinese, the young generation in China being perhaps more vibrant and active. But then we're also getting stories of Chinese youth lying down, right? And we also have stories of perhaps revenge saving, which is an interesting way of actually reacting to perhaps economic uncertainty from the youth. What exactly is the picture for the Chinese youth? Because we're seeing both stories in equal fashion at the moment, based on what you're seeing on in the mainland at the moment.
We do have to separate the cyclical component, which is we're in an economic downturn. Their jobs are not secure. From the general propensity to consume, their desire to spend is much greater than the parents' generation. If China is able to come out of the economic downturn, stabilize employment opportunities, this youth would be able to spend. But we've also seen how much they embrace leisure. Yes, lower costs, lower spending, but they're still having a great time.
Right. Okay. A lot of this, of course, is happening because of, as we mentioned, the necessity of trying to find new trade routes, and trying perhaps start economic reform. In fact, I remember that Li Daokui from Tsinghua University said that Trump is somewhat viewed as an accelerator because his presence has made China take the necessary reforms needed for the economy a lot more seriously and with a lot more fervor, actually. Do you think that this is actually being viewed as a good thing long term for China? Because as we know, no economy is perfect. Every economy needs a little bit of a fine-tuning or changes at the moment. Do you think that that the view of Trump as being that accelerator for internal reform in China is indeed accurate?
Trump should be given an award around the world, from China, from Europe, to be this Trump shock, boosting domestic reforms and acceleration, especially on the technology front. That was really China's existential problem of the choke points in technology. And look what has happened since 2018. Massive acceleration domestic capacity, especially on the choke points like in semiconductors. So short term, very bad. Longer term, maybe not so bad.
Right. Okay. And we also talk about, in relation to your comments about the tech curbs, actually, just the other week I was at Computex, and Jensen Huang of NVIDIA actually commented that the chip curbs are probably not working the way the U.S. wanted, and perhaps it's not effective to actually impose them. I mean, what exactly has this done in terms of jump-starting the tech sector in China, which was already growing before the chip curbs were actually imposed?
Well, the easiest way to understand this is that when China was comfortably importing stuff ready-made from the U.S., they did not need to innovate. They didn't need to plow in billions and billions and tens of billions into a sector that other people have already mastered, other countries have mastered. Now they have to do it themselves. What do you think will happen? A whole of a nation program to go chase Olympic gold medals. That's the effort. That's the drive. Chinese people always need a drive and a goal, and Trump has given them that.
Okay, and so the concern also now is that, this trade war, and we've all talked about the impact on the U.S. economy, perhaps going to recession and dragging the the rest of the world economy down with it. But not a lot's talked about what impact will have a Chinese slowdown will have, because in a trade war, everyone's nose get bloody, including the Chinese economy. Is there a concern, or should there be a concern also, that because of how important China is now, especially for Asia, that a Chinese slowdown, whether they like it or not, or wished for it or not, could actually have a second-order effect on economies here? And should economies be worried about the second-order effect from a Chinese slowdown as much as a second-order effect from a U.S. slowdown?
Absolutely. I think everybody should be worried about U.S.-China trade spat, even if their tariffs were reduced. The reason is simply that Chinese manufacturing goods anchors global goods prices. So if China's tariffs are placed on tariffs, everybody can suffer from higher input costs, and there will be secondary effects from uncertainty, from investment, from a macro slowdown. Who knows? Maybe a financial cycle from the U.S., higher interest rates, a lower credit squeeze. It will all ripple through. We've seen that before.
Absolutely. The other thing that's also been talked about here, because we're seeing a lot of these trade talks develop right now, the ASEAN GCC, ASEAN China, China GCC, and the three of them all together at the moment. Everyone is trying to build stronger trade routes, and it seems that there's another thing that's picked up actually in terms of discussion, and that's perhaps moving away from the risks of being too dependent on the dollar as a modicum of trade at the moment. Do you think that these recent events might actually accelerate that? Because and perhaps these talks will start to make countries in ASEAN, in China, in the GCC to speak to each other and go like, you know what, maybe we should start trading in our own currency at the moment. How realistic is that?
I think it's very realistic. We've already seen the dollar decline slowly, gradually, but surely. Every time there's a shock, a geopolitical shock, sanctions, U.S. sanctions, there's a jump in the degree of other currencies being used. We've seen a very rapid pickup, especially in recent times. And I think in terms of just trade being invoiced in an alternative currency like the RMB, that's already happening very, very fast. To displace the dollar as the funding vehicle of the financial system, that's obviously going to take a long time, but things are going to pick up. And the alternative payment system, we're already seeing this huge undertaking in the rest of the world.
But this has also caught the attention of President Trump. It seems like everything seems to ruffle his feathers nowadays. He has said that he is prepared to punish countries that want to move away from the U.S. dollar. The question is, how realistic is that based on what the U.S. is, where the U.S. is at the moment?
The question is, leverage has a half-life. You use it a lot, you're going to lose the power. That's precisely with the dollar. You punish other countries, you're going to accelerate and make them run away faster.
What is important, though, or what is crucial if countries, let's say, want to move away from that? If countries identify that, hey, we want to move away from the dollar, we want to adopt the yuan, we want to adopt the rial, we want to adopt the rupee, for instance. What's going to be critical if they want to actually accelerate that? Because the how is probably as important as the why.
This is where you need a really large country like China who's able to provide safe assets like government bonds for people to want to hold RMB assets. If you do that, France and Germany had a chance, they didn't do that. If China's able to do that, then I think that pace will pick up very, very fast.
And just quickly here, I do want to get your thoughts on two particular blocks that ASEAN is talking to right now. There's the opportunity to build ties with the GCC, there's the opportunity to build ties with China, but we've also seen that cooperation between the Middle East and China has also grown by leaps and bounds. Can you talk to us about how momentous the growth has been and why it's so important in the global economic context, the economic ties that is between the Gulf region and China specifically?
I think this is a momentous event taking place, strengthening the ties, diversification, complementarity across these regions, a lot of things to collaborate on, similar world views on the economy, on a coexistence economically, environmentally, development-wise, a lot of things to develop. And again, we have to give Trump an award for accelerating that collaboration.
Absolutely. So it seems that it is confirmed he is indeed an accelerator, not just for China, but the rest of the world. So many questions, so little time. I do want to take Keyu Jin, professor from the London School of Economics, to join us and provide us some very important context as we approach this very important trilateral summit between ASEAN, the Gulf region, and China. And if all these blocks have an important part to play, but again, will it be enough to at least buffer the possible headwinds coming from the United States and this defragmentation of the trade order? Those are questions that will have to be answered over the course of the coming days. We hope will be answered over the course of the coming days. But for now, I'll have to throw it back to you, Emily, out in Hong Kong.
JP Ong, thank you very much. Live from Kuala Lumpur, as Malaysia is hosting the newly established ASEAN GCC China Summit, the inaugural edition taking place this afternoon. And as we know, ASEAN is China's largest trading partner, with total trade valued at $234 billion in the first quarter of this year. Now, for more on everything we've covered on our show this morning and deeper dives into the Greater China region, sign up for our China Connection newsletter using the QR code currently on your screen. We'll be back right after this.